we just go right into questions and answers. But I really thought that maybe we were giving a little bit the wrong lesson because all the questions would naturally tend toward current events. And so this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to...
Hello, my YouTube family. Igor here to share some the best ETF stocks for 2026, 2027. Here are the ticker number, VTI, SPMO, GRNY, and FUTY. That's the bonus one. If that's all you needed, please go ahead and give me a thumbs up and subscribe for more good news. So, on the previous video, you heard what Warren Buffett said, one of the best investors in the world. He said if you invested in 1942 $10,000 on the ETF index funds, you will be like around $51 million. So that's a long time, but look, value investors always win. You can't time the market. So I'm here to share some of the best ETFs for you to look at and add to your portfolio if you think they're good for you. So VTI, it's Vanguard Total Stock Market Index Fund ETF, which represent approximately 100% of the investable U.S. stock market and include large, mid, and small, and macro stocks. So this one have a lot of stock. His counterpart is VOO, but VOO have a smaller stocks number compared to the VTI. So one thing that you need to look at with VTI is if you invested 5 years ago, you will have had 100% return to today. And since 1950, VTI and VOO has proven to give almost 10% return yearly. So you can use a wealth calculator and kind of look at how you can benefit and plan on your investments. This one has a yield of 1.14%, and the expense ratio is very low. It's 0.03%. That's a very low compared to some of the other ETFs on this list. As far as performance, year to date, it's 15% up, which is beating its peers by which they up by 13.10%. So if you look at all these returns, year-over-year returns, you see that VTI has been outperforming some of the other ETF in the list. So do your research before you invest into VTI. So the next one that I like a lot is SPMO. This one, 5 years to now, will have given you 154% return because this one is based on momentum, right? And which kind of helps with readjusting the stocks based on the ones that move the S&P 500 a lot faster. So if you look at it, the fund invests at least 90% of its total assets in security that comprises of the underlying indexes. So this is based on 100 stocks, which is a lot smaller than VTI. So that's why when it moves up, it really moves really well. So 5 years ago, you put $10,000, you will be having 154%, which is really good return on your investment. It's over what, almost 13-14% year over year. And if you reinvest the dividends on top of that, that will have really given you more on your return. For this one, the expense ratio, it's a 0.64%. And no, the yield is 0.64%. The expense ratio, it's 0.13%, which is bigger, like higher than VTI. That it's still a good return on the buck. So if you look at year over year, year to date, SPMO is up 28.29%. And if you look at year over year performance, he has outperformed the category of all those S&P 500. That is 13.10%, and SPMO is at 28.29%. So, do some more research and see if this works for you. And if it is, you can add it into your portfolio. So the next one is GRNY, which is a fund strat grinding short US large cap ETF. So this is an actively managed one by Tom Lee at Do Trust in Tom Lee. What he was saying, the reason that they come up with this ETF is, if you look at the S&P 500, not all the stocks move the S&P 500. So this fund actually readjust based on the stocks that are moving the ETF, the S&P 500. So this is like a baby of VTI and SPMO. So it's a good one. Year to date, it's up 30%. It's a new ETF, so we don't have a long-term performance data on it. But this year, it's up almost 30%. So, this fund invests at least 80% of its net assets, and it has a market capitalization greater than 10 billion. It only include companies that have a market capitalization greater than 10 billion. So the P ratio, it's around 37.70, which is a bit high. I like it around 22 or close to that. The expense ratio is 0.75%. So if you look at the performance, right, of the GRNY fund strat ETF, year to date, 27.40%, and it's outperforming all the categories. And also there is no 3-year return because it's a new one, so be careful with this one. But Tom Lee has been right on predicting the market direction almost 70% of the time, based on the CNBC data. So I will, take a look at it. If you like it, include it into your portfolio. So, year over year, utilities prices goes up. Your water go up. Your light bill go up. So the MSCI Utility Index Fund always grows, and this fund invests 80% of its assets in securities included in the fund underlying index. So the fund underlying index is the MSCI US Utility 2550 Index, so which represents the performance of the utility sector in the U.S. equity market. So 44, 45%, 5 years, it gives you a return of 9% almost. And it has a yield of 2.59%, and the expense ratio is very low. Yeah, this one. I have it in my portfolio in my IRA. Let's go back. I have it in my IRA. So, all right, let's move on to the performance. If you look at it, these are some of the top 10 holding companies that it's considered in its portfolio, and a lot of these companies are doing very well. So if you look at the sector that weighs into the ETF, you can see that we have utility, we have energy, we have industrial, technology, consumer cyclicals, basic material, consumer defensive, communication services, financial services. Those are very low. They are in there, they're just very low. But 99% of the ETF is composed of utility. So performance year to date hasn't been really good, but it's underperforming in the category. But it's still up 2.26%. This is something you can put part of your foundation in your portfolio. At least you're gonna get a growth, but you're not gonna get that much of a decline. So when you're building a portfolio, you need to have some stocks that move faster, some that move relatively slow, and some that that might go negative, but at least you're gonna have a balance. So when the market goes red in the bear market, your portfolio don't just drop a big time. So if you look at year over year, it's been doing good. And I did talk about this one at the beginning of the year, and it's up from that when I talked about it. 1 year return, it's around 25.42%. Like I said, it is underperforming the category where it's classified, but it's still a good one. So the next one is a kind of a way that I plotted all the ETFs, so you can look at the past 5 years. Like I said, the Granny ETF, the smallest one, at the bottom, you can see that it represents the orange line, which is just a 1 year data. Now, if you look at it, SPMO is doing great for the past 5 years. SPMO overperformed relative to the VTI, which kind of moves at the same pace as the VOO. So, based on this data, that's why I kind of invested more into SPMO, and I do have some investment into VTI too. So, take my research, add it to your own research, and make a decision. We are all here to make money, retire early, build financial freedom for our families. So, if you have questions, you have things you want to discuss, put it in the comments, and stocks that you like, I will take a look at it and I will give you my opinion. Might not be the way you like it, but I will still give you my opinion. All right, thank you everyone. If you like my videos, please like and subscribe.